The first transaction occurred at 3:33 p.m. California time. Maya Chen nearly spilled her coffee when the red alert flashed on the screen of her blockchain monitoring lab at Stanford University. 16 years of analyzing the Bitcoin network, and she had never seen anything like it. The address appearing on the monitor was legendary: Satoshi Nakamoto's Genesis wallet. "Impossible," she muttered, adjusting her glasses with trembling hands. But it was there, crystal clear in the data, an outgoing transaction of 50 BTC from the wallet that had remained untouched since January 2009. After all these years of speculation, conspiracy theories, and urban legends, Satoshi had finally made a move. Maya picked up the phone and dialed Alex Morrison, her research partner at Oxford. "Alex, are you seeing this? Jesus Christ, Maya, is it real? Triple verification confirmed, and that's not all." Maya clicked on another tab. There's more movement, much more. Across the Atlantic, Alex stood in front of his monitors, watching a cascade of transactions begin to ripple like seismic waves across the blockchain. It wasn't just the initial 50 BTC. Hundreds of addresses connected to Satoshi's unique mining pattern, the famous Satoshi pattern, were beginning to activate simultaneously. "Maya," Alex whispered, "he's moving everything." The New York Stock Exchange hadn't even opened yet, but traders' screens were already showing a red chaos. Bitcoin had plummeted 23% in a matter of hours, the biggest crash since 2018. Exchanges were grinding to a halt under the panicked selling. Jennifer Walsh, CEO of hedge fund Crypto Vanguard, sat in her emergency meeting room with a cold cup of coffee and dark circles under her eyes. "Report," she ordered. "We've already lost $340 million in BTC exposure," said Marcus, her director of trading. And that was just in the first hour. If Satoshi actually starts selling the 1.1 million Bitcoins... "Don't finish that sentence," Jennifer cut in. "Options? We can liquidate everything now and accept the loss. Or we bet this is just the beginning of something bigger." Jennifer looked out the picture window at Manhattan. Below, people were walking to work, oblivious to the fact that the creator of the world's most famous digital currency had just awakened from a 15-year hibernation. Dr. Elena Rodriguez had spent her life studying behavioral patterns in decentralized systems. As a professor of applied cryptography at UC Berkeley, she had followed the Satoshi case from the beginning. Now, as she analyzed the real-time transaction data, a disturbing pattern emerged. "It's not random," she muttered to herself. The transactions followed a specific mathematical sequence. It wasn't just someone moving Bitcoins, it was a message. Elena opened her decryption software and began inputting the transaction amounts, the timestamps, even the destination addresses. After 2 hours of intense work, she found it. The first letters appeared on the screen: THE, TIME, HASCOME. Elena felt a chill. Satoshi wasn't just moving Bitcoins. He was sending a message to the world. Somewhere in the world, on a server protected by layers of encryption and routed through dozens of countries, a lone figure typed. Satoshi Nakamoto, or whoever he was now, had watched silently for over a decade as his creation grew beyond all expectations. Bitcoin was no longer the peer-to-peer currency he had imagined. It had become a speculative asset for the wealthy, a store of value for corporations, a plaything for billionaires. The decentralization he had dreamed of had given way to massive mining farms controlled by a select few. It was time to act. Bitcoins weren't being sold randomly. Each transaction was carefully orchestrated. The first 50 BTC were sent to charities around the world. Children's hospitals in Bangladesh, schools in African villages, food programs in Latin America. Subsequent transactions went to open-source developers who had kept the Bitcoin protocol running for all those years without recognition. But that was just the beginning. Lloyd's of London headquarters was in an uproar, not just because of the Bitcoin crash, but because insurers were beginning to realize the broader implications. Thousands of cryptocurrency insurance policies, derivatives contracts, pension funds with Bitcoin exposure, everything was at risk. Gentlemen, said Charles Whitmore, head of systemic risk, we're not just dealing with market volatility. We're witnessing an event that could redefine the global financial system. In recent years, Bitcoin had become so integrated into the traditional financial system that its sudden instability was sending shockwaves through markets. Shares of companies like Tesla and MicroStrategy, which held Bitcoin on their balance sheets, were plummeting. Bitcoin ETFs were suspended. Central banks around the world were in emergency trading sessions. Maya had spent the last 18 sleepless hours tracking every movement on the blockchain. What she discovered left her speechless. "Alex, you need to see this," she said over the secure video conference. "What did you find?" "It's not just about the money. Look at the destination addresses." Maya shared her screen. Satoshi's Bitcoins weren't being sold chaotically. They were being distributed according to a meticulous plan. 200,000 BTC for a global technology development fund. 150,000 BTC for renewable energy research. 100,000 BTC for education in developing countries. 50,000 BTC for free software developers. 25,000 BTC for independent journalism. "He's dismantling his fortune," Alex whispered. "Satoshi is giving it all away." Not everyone was willing to sit idly by as the cryptocurrency market collapsed. At Goodman Sanchez headquarters, an emergency meeting was underway with some of the most powerful figures in finance. "We need to stabilize the market," declared Robert Chen, head of digital trading. "If we let this continue, we will lose trillions." The plan was audacious. A consortium of investment banks, hedge funds, and technology corporations would band together to buy Bitcoin en masse, absorbing the selling pressure from Satoshi's transactions. It was essentially an economic war against Bitcoin's creator himself. "He may have 1.1 million Bitcoins," Chen said, "but we have $50 trillion in combined liquidity."
Темная ночь, только пули свистят по степи.
Dr. Elena Rodriguez had finally decoded the full message Satoshi was sending through the transactions. It wasn't just, "the time has come." It was much more. The message read, "The time has come to return Bitcoin to its original purpose. Not as a store of value for the wealthy, but as a tool of financial freedom for all humanity. I give back what was never truly mine. The future is decentralized. The future is now. Don't SN." Elena published her findings in a social media post that quickly went viral. The world now understood. Satoshi wasn't destroying Bitcoin. He was liberating it. Asian markets opened in freefall. The Nikkei lost 8% at the opening bell, dragged down by declines in Bitcoin-linked stocks. In South Korea, the government declared a state of financial emergency. In China, even with Bitcoin officially banned, the black market was in a state of total panic. But something interesting was happening. As Bitcoin's price plummeted due to panic selling by large investors, small investors around the world began buying. Satoshi's original philosophy was resonating with a new generation of users who saw the distribution of their wealth as an opportunity to truly democratize digital currency. In favelas in Rio de Janeiro, internet cafes in Mumbai, cyber cafes in Lagos, people were creating Bitcoin wallets for the first time, buying fractions of the coin with their few dollars. It was exactly Satoshi's original vision coming to fruition. At the Emergency World Economic Forum, 3 weeks after Satoshi's transactions began, world leaders met in an extraordinary session. Bitcoin's price had stabilized, but not at previous levels. Instead, it had found a new equilibrium: lower volatility, greater distribution, and real use as a medium of exchange, rather than just a store of value. Ladies and gentlemen, said the IMF managing director, we are witnessing not just a market correction, but a fundamental redistribution of wealth on a global scale. The numbers were impressive. 50 million new Bitcoin wallets created. Peer-to-peer transactions increased 500%. Bitcoin use for international remittances increased 800%. Volatility decreased 60%. Professor James Liu was teaching a lecture on the Satoshi event to a packed room of economics and computer science students. What Satoshi Nakamoto did wasn't just move Bitcoins, he explained. He executed the largest redistribution of wealth in human history. In a matter of weeks, he transferred more than $120 billion to charities, developers, education, and sustainability projects. A student raised his hand. Professor, but he lost his entire fortune. Why? Professor Liu smiled. That's the $120 billion question. But maybe the real question is, did he lose or did he gain? On the screen behind him, a graph showed the growth of Bitcoin adoption in developing countries since the Satoshi event. The curves pointed inexorably upward. Maya Chen still worked late, but now with a different perspective. The Satoshi event had changed her career and her life. She had become one of the world's leading experts in forensic blockchain analysis, a consultant for governments and international organizations. But one question still nagged at her. Alex, she said during one of her weekly calls, have you ever considered that we may never have discovered who Satoshi really is? What do you mean? All our analyses assume there was one person or a small group. But what if Satoshi was something more? Alex was silent for a moment. You mean like an AI? Not necessarily, but think about it. The mathematical precision of the transactions, the perfect timing, the coded message, the flawless execution of such a complex plan, and then, after completing the redistribution, complete silence again. Are you suggesting Satoshi isn't human? Maya looked at her screens, filled with data she'd analyzed thousands of times. I'm suggesting that perhaps Satoshi is exactly what he always said he was: a system, a protocol, an idea come to life. Bitcoin had truly become what Satoshi had envisioned: a decentralized global currency. No longer a speculative toy for wealthy investors, but a real tool for billions of people around the world. Satoshi's forced distribution of wealth had created thousands of innovative projects. Solar power in African villages financed by Bitcoin, internet-connected schools in remote parts of Asia, payment systems that allowed migrant workers to send money home with virtually no fees. Bitcoin's price never returned to its previous speculative peaks. But that didn't matter. Its utility had multiplied exponentially somewhere in the world, perhaps on a silent server, perhaps within the decentralized structure of the blockchain itself. The entity known as Satoshi Nakamoto watched. His work was complete. The revolution had not been violent. It had not overthrown governments or destroyed the financial system. Instead, it had simply offered a better alternative. And humanity, slowly but inevitably, had chosen to use it. The last block mined that day contained a special message in the Coinbase transaction, visible only to those who knew how to look. The revolution wasn't about destroying the old. It was about building something better. Mission accomplished. Thank you for believing. Maya Chen smiled when she saw the message. After all these years, she finally understood. Satoshi Nakamoto wasn't a person who had spent his coins. Satoshi Nakamoto was an idea that had come to fruition. And ideas, once released into the world, can never be contained again. End. This story is a work of fiction. Any resemblance to real future events is pure coincidence, or perhaps inevitability.